With interest rates as high as they are right now, you need every advantage that you can get to keep those rates. How do we keep those rates low? Keep watching to find out.
Have you noticed what big stars real estate agents have become?
Salutations, good people. I'm Josh Oglesby with Upstate SC Living and Real Broker LLC. And today we are talking about 4 things that can help keep your mortgage and interest rate lower. Now, of course, if there's anything that I can do for you in the state of South Carolina when it comes to real estate, my contact information will be right here. Just reach out. I'll talk to you. It's no secret that rates are what they are right now. However, if it's time for you to buy, then it's just time for you to buy. Don't let a silly little thing like higher interest rates keep you from buying the home of your dreams. Now, while there are other ways to combat high interest rates right now, I'll be making a video in the future about a 2-1 buy down and break down exactly what that means for you. However, for the sake of this video, we're gonna stick to the 4 things that can help keep the rates low, and it's pretty basic stuff. However, these are things that you just may not know. Well, that's why I'm here. Kick your shoes off. Stay a while. Now, over the last couple of years, it was fairly easy to keep the interest rates low no matter where you were at with your finances and your, say, credit score. And that was easier to do because mortgage rates were at a historic low. However, this year's rates have risen quite a bit. Now, if you're looking for ways to combat today's higher interest rates and lock in the lowest ones you can, here's a few key factors to focus on. Now, since approval opportunities can vary, be sure to contact a local trusted lender for more advice. And if you're in the South Carolina area, just contact me if you need some guidance on where to look for these trusted lenders. I know quite a few really good rock star lenders in this area that I wholeheartedly trust with my clients. Number 1, and possibly the most important, is your credit score. Freddie Mac explains this: when you build and maintain strong credit, mortgage lenders have greater confidence when qualifying you for a mortgage because they see that you've paid back your loans as agreed and you've used your credit wisely. Strong credit also means your lender is more apt to approve you for a mortgage that has more favorable terms and a lower interest rate. That's one reason that it's super important to maintain a good credit score. Now, maybe you're not in the best place you possibly could be with your credit score because, I don't know, maybe you took that credit card that you got approved for when you were 18 and you know, 15 years ago, you bought yourself a Wii and a big screen TV so that you can play Mario Galaxy. Give your smile to me. And it might have taken you way longer than it should have to pay off, and it really affected your credit score. Then you should probably see your local lender for advice on how to improve that credit score. I don't know where I got that example from. I'm just just off the top of my head. Number 2 on the things that can affect your interest rates and mortgage rates is your loan type. There are many different types of loans offering buyers many different terms, for qualified buyers, of course. The Consumer Financial Protection Bureau, or the CFPB, says this: there are several broad categories of mortgage loans, such as conventional, FHA, USDA, and VA loans for you veterans. Lenders decide which products to offer, and loan types have different eligibility requirements. Rates can be significantly different depending on what loan type you choose. Now, when working with your real estate advisor, make sure you discuss with them what type of loans are available to you and in your area, and of course, ones that you qualify for. Number 3, your loan term. Just like with location and different types, you do have options. Now, what is a loan term exactly? It's the length of time that it's going to take you to fully repay your loan before you fully own your home. So what will your loan term affect? It'll affect your interest rate, it'll affect your monthly payment, and the total amount of interest that you'll pay over the life of the loan. Now, depending on your situation, the length of your loan can also change your mortgage rate. So again, discuss with your loan advisor and real estate advisor what loan is going to make the most sense for you, and explore all of the options. Even if you're not provided with one that you think is the best, do your own research and take whatever you dig up to your loan officer and say, hey, what about this? I've heard many times that lenders will provide options for a buyer, and not every time it's the right fit for the buyer because, well, you know you better than anyone and you know your situation better than anyone. So make sure you do all of your due diligence and your homework before pulling the trigger on exactly what loan type you're going to go with. However, the good news is there's always the option to refinance, or if you're Dave Ramsey, refinance. And number 4, your down payment. In general, a larger down payment means a lower interest rate. The bigger the down payment that you make, the less risk you are to the lenders because they see that you have a higher stake in the property itself, and it's going to make them feel a little more comfortable about lending you a boatload of money. So I highly advise, if you can put 20% or more down into a property, do it.
Make your dreams come true. Just do it.
You'll usually get a lower interest rate. However, again, for the 100th time this video, make sure you speak with your loan officer and make sure that it does make sense and find out the different rates you're going to get. Ask them what it's going to look like if you put 15% down. Ask them what it's going to look like if you put 18% down, and so on and so forth. Don't think you're pestering them by simply asking them to do their job. Being on the realtor side of things, I'm not going to get upset if somebody wants to look at 20 different houses. I'm going to be excited to show these houses. Your local lender should be excited to discuss with you every option for you and making sure that you make the best decision possible. Now, the bottom line is that these are just a few factors that can affect your mortgage rate.
And that's the bottom line, because Josh Oglesby said so.
I've now said it multiple times here on this YouTube channel that the best thing that you can do when going into this situation is have a team of professionals on your side. Connect with a local real estate expert and a trusted lender so that you have the best expert advice that you possibly can when going into quite possibly the biggest purchase of your life. Speaking of local real estate professionals, if there's anything that I can do to help you with your real estate needs in the upstate of South Carolina or South Carolina in general, my contact information will be right here, and I'll also leave ways to contact me in the description of this video. Simply send a text or drop me an email. I'll get really bold. You can even call me. Now, if you enjoyed today's video and you found it beneficial in any kind of way, don't forget to like and subscribe for more videos just like this. And until next time, I've been Josh Oglesby with Upstate SC Living and Real Broker LLC, reminding you, do enjoy yourselves.